Yo, good morning, everybody. Happy, what's today? Thursday? Yeah, it's Thursday. It's Christmas Eve. It's a Christmas Eve edition of Benzinga's pre-market prep. Spencer Israel, Dennis Dick, producer Enver with you backstage. It's going to be a light, casual day. I'm doing my best Dennis impression. I'm wearing almost pajamas, so we're gonna have a light day. We're gonna talk about some movers. We got some news. JD is moving. The casinos are moving. We'll talk about that. We'll talk about what happened in Chipotle last night. We might talk about Tesla back over $1,000. We have two guests on today, Marc Chaikin and Peter Tuchman. They'll join us at 8:15 and 9 o'clock, respectively. We will take questions from our chat. Good morning, everyone in chat. I see you. Hope you all had a great rest of your day yesterday. I missed you guys. Let's start today's show. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. I've got Dennis here with me. Dennis, did you like the snow? The snow coming down?
Yeah.
Yeah?
All that.
Nice little, and I see you got the hat there.
Festive. Yep. Getting ready. The kids are pumped up. The boy said to me, it's Christmas tomorrow. I was like, not quite. Christmas Eve tomorrow. So feels like it should be Christmas tomorrow because this is our last show. Just the way that Christmas fell. It's weird. So we are closed tomorrow. I can't remember the last time we were actually closed on Christmas Eve. That feels like that's been a while ago, but they're doing that because obviously Christmas falls on a Saturday.
And then New Year's falls on a Saturday, but we're open on Friday. I think it's the first time in 11 years that the stock market is open on New Year's Eve, like for a full day.
Yeah. Well, New Year's Eve, always Christmas was a half day. Christmas Eve was a half day. So New Year's Eve was always a full day. If it was open on New Year's Eve, it was a full day.
All right.
But Christmas Eve was always a half day, closing at 1. But they're the whole day off. I don't know what I'm going to do with myself tomorrow. Most of my Christmas shopping is done, I think. I hope. My wife did most of it.
So, yeah, it turns out all the hullabaloo that I was making a few months ago, like, oh, buy your presents in September. Turns out that ended up not being a big problem because I didn't really hear of anyone that was having problems. And I saw some stories that Christmas shopping has gone okay in terms of delivery times and all that.
So.
I hope everyone got your shopping done by now because it's, a little bit late. But
yeah. And if we're talking Christmas presents, I mean, this is a good segue into Tencent, I guess. So they're giving Christmas presents to their shareholders. And tell us about this, Spencer, because JD shareholders not liking the presents.
Yeah, I'll be honest. I didn't know that you could do this. So obviously, companies that have excess cash or whatever, they want to reward their shareholders. And one of the ways they can do that is with a dividend. And we know that usually dividends are just cash payouts, right? You end up or you can get them in shares of the company, right? You get them in cash or you get them in shares of whatever the company is. What Tencent is doing is they're saying, hey, we're going to give you guys almost all of the shares of JD.com that we own as Tencent. We're just going to give them to you. So we always say that there's only three true outcomes, right? Buy, sell, or hold. There's actually 4 outcomes: buy, sell, hold, or give away your stocks for free, because that's what Tencent's doing. They're giving away their JD.com shares to Tencent shareholders. So what's going to happen here is right now, Tencent has around a 17% stake in JD.com. After this dividend's paid out, a special dividend, their stake in the company will go down to 2%. So from 17% to 2%, they're giving away about $16.5 billion worth of JD.com shares. And so if you're JD.com, if I can pull up that chart this morning, they're not liking this headline. I'll be honest, I didn't know you could do this. I didn't know this was a thing you could do. I didn't know you could give away stocks. I guess
do what you want.
You do what you want.
It's basically spinning it off. They're basically spinning off their shares.
Yeah.
To their shareholders. Their JD shares.
Yeah.
So, it's a nice way to say we're giving it away. It's basically spinning it off. And they don't like that because all of a sudden these JD shares, which were held by Tencent, now will go into the public hands, and they're anticipating that the public, their shareholders, will likely sell them. So that is why you're seeing JD get hit hard here this morning, right on this headline, which broke around 7 o'clock last night. Stock down $5.34 now in the pre-markets, down 7%. It not too far away from the December 20th low, which was $67.16. That's the low it absolutely needs to hold. I think in this case, if you're looking like to get some more risk on your portfolio, and I'm not a big fan of buying China stocks, I've said that already, but JD seems to be, one that's been liked for a long time. I think this dip could get bought. So I don't know if you want to be early on it, but 67.16 seems like a nice level.
Yeah, but it's not. It's not even a spinoff because they're not selling; they're just giving it away. So, like, what does that say about their feelings about JD.com? They're just going to give away their stake for free.
But they're giving it to their shareholders, so you can say it's free, but their shareholders own the company, so they're basically, you know what I mean? It's not like they're out. The shareholders are still getting it. So it's not like Tencent shareholders are like, what do you mean you're giving away our shares? They're giving them away to those same shareholders. So
I
yeah.
suppose.
So it's not like they're actually out the money. The shareholders themselves aren't going to be out the money, but they're just they want to be Tencent.
Anyway,
they don't want to be. What else do they own?
So for
do they do this in other stocks?
For those who are interested, I'm putting the link to the announcement in the chat. I just did it. If you want to read more about what this means, they didn't give a reason. If you're wondering why, we don't know why. They just because is the answer. What does Tencent own? That's the problem, right? Is Tencent owns everything. They own basically. They have stakes in every major or almost every major video game publisher on Earth, U.S. companies or not, right? They own, they have small pieces in Activision, small pieces in, I think they got some Take-Two as well. They've got, they own all of Epic Games, right? But as far as public companies, they kind of have their teeth in every major Chinese social media and music and video technology platform, right? They kind of have their teeth in all of them. So if you go across the board and you can look at WB, right, which is Weibo, you can look at YY, for example. Let me pull up on the chart here, right? So you can WB, right?
Those stocks are all down slightly here too.
You can do YY.
Yeah.
You can do how's Huya trading? Yeah, okay.
It's down slightly too.
Yeah. So
they're all down a bit. HUI has been going down, I feel like, forever.
So what I would do, and I'm going to do this right now, and I'm going to go look at the holdings in KWeb, and I'm going to see, and I'm going to operate under the assumption that Tencent has their teeth in a lot of these names. But even if they don't, frankly, they don't have to because a lot of these names are going to trade down in sympathy. So what do we have here? Top 10 holdings. A lot of them are held in China too. Is BEKE down? Let's see.
Yeah, they're all down.
They're all going to be
not like JD, but maybe there's anticipation that more of this could happen.
How's TCOM Trip.com?
Yeah.
Yeah.
No, it's actually not down. It's one of the few that are not down.
So yeah, all these names are going to trade down in sympathy today with this headline, and I frankly, someone said it in chat and echoing Dennis, they can do whatever they want, right? It's their own.
Giving it to their shareholders though, so I don't necessarily just think of them as giving it away. Like it'd be upsetting if they're like donating it to some other, they're not to their shareholders, and that would be like money lost to the shareholders.
Here, so
but it's just basically like giving it back. So the shareholders own shares of Tencent, which owns shares of JD, and JD just giving those shares back to the shareholders. So it's still the underlying thing is the shareholders still own the shares. They're just going to own them direct. They're not going to own them through Tencent anymore.
NTES trading down, PDD, Pinduoduo trading down. That's actually what's trading down.
The biggest reason, though, that this is trading down is because those shares, which have been held tightly by Tencent, all of a sudden will come into the public market, into their shareholders. And in all likelihood, those shareholders might be like, well, I didn't want JD, I want Tencent. They're going to sell them. And that's why the anticipation, the Arabs are ahead of it, anticipating that there will be a significant seller coming into the stock once those shares are actually distributed. So that is why you're seeing it down. I'm saying, should it be down, like 6, 7, 8%? I don't know. It's hard to put monetary numbers, especially when you're talking a Chinese stock. But from a technical perspective, JD was actually showing some life 2 days ago. So I like it when they start showing some life, and then you get some, so something like it's not necessarily like just distributing these shares, and that brings it right back down to the original support. So I don't know if I'm gonna jump in there, just probably because Chinese name, but if I was just trading it from the strength the last couple of days, I'd say weakness is maybe to be bought, leaning on that low of the move, which is 67.16.
Right. So you've already got a low from this morning that we're already a buck off, right? We've been going up for the past couple hours.
Yeah.
So,
and how low did we get? Do we know what that low is?
Yeah, 60. What is it? 67th, 66. Sorry, 66.38.
Pretty close. Pretty close. To that 67.16. So you can see where they bring support in. I mean, the levels work. The Joel Elconin level method, where you're just looking at old lows, old highs. Where could the stock potentially bounce? Kind of bounced right where you thought it should. So that's good news so far. Do the selling waves just come in and continue to knock it down? Well, we find that out after the open. But I'll say innocent until proven guilty on this. Let's see if that support holds.
Yep. Just to run through a couple more names here. Billy, Bili, probably trade down in sympathy. Yes. And then you've got a couple more.
Billy.
You've got, hold on. I had the list.
Wow. Billy's come down that far, eh? I haven't looked at that stock for a while.
Yeah.
$45. This was $157 back in the tech bubble burst of February 19th, which we're calling it now. That was the great tech bubble burst when all these stocks obviously made their highs, and they've been down all year. Holy mackerel. So this actually sets up BILI. We were talking about stocks potentially for the January effect. This one sets up quite well too. Again, Chinese names I haven't been too excited about them for obvious reasons, but I mean, if you think there's definitely probably some tax loss selling going on here, and I would not be surprised if the stock shows strength in early January. So I don't know when you want to time it. You got 5-6 days before January starts, 6 days if you include today, but a dip here, 43.21 is the low. I don't mind these stocks on the dip. I'm going to say it. I don't mind buying the dip here.
Last one was IQ that I wanted to bring to your attention.
Where's that? $4. Oh, some of these stocks have just been crushed.
Hey, out of curiosity, I remember when these things all spiked. Yeah, remember the summer of 18? Remember June of 18?
Yeah.
Remember when every one of these things was the hottest thing since?
There was 3 that I paired together.
Yeah.
BILI, IQ, and HUYA, and they all tracked each other nicely, and they were great pair trades for a bet.
Yeah.
But man, then Billy became the leader, and the other 2 were forgotten. So now Billy's come off so far as well. It's obviously still way higher than the other ones, but they obviously separated themselves. But they were all the online, like social gaming platforms, right? All similar.
Yeah.
Yeah. BILI, HUI, IQ. So, but obviously those pairs all broke down now. So BILI has been the clear leader of that group. But man, it's come off too. Which brings us back to the question. I mean, we had some dips. We've had some, a few on some of the growth names. Even yesterday when we were rallying on, it seemed like everything, getting back up. We're right back up to the highs. It's been some separations. So there is, some opportunities here on some different names, and there's been some laggards too. I'm just gonna start accumulating some dog positions just for the look ahead. And, again, next week will be when I'm starting to really accumulate some of these just for the look ahead that, hey, maybe the tax loss selling is going to slow down. It's obviously going to stop eventually at the end of next week. And maybe we get a relief pop in some of these beaten down names in January. So I think you could be a little early yet. I don't want to be too early on the trade because maybe there's another wave of tax loss selling coming at you yet. But I think January could be okay for some of these stocks, at least early January. That's what seasonality would say.
I'd be curious to get Marc Chaikin's thoughts on this. Let's bring Marc
to the
show. He is the founder of Chaikin Analytics. He's the creator of Chaikin Money Flow, among many other tried and true indicators. I think I said that right. The Chaikin Power Gauge as well. Marc, good morning. How are we doing today?
Good morning. Good pre-Christmas morning to you.
So, what is your take on the fact that, at the end of the day, we are 1% off of all-time highs in the SPY, 3% off all-time highs in the Qs. The Russell, we know, is kind of its own beast right now, but things are looking up.
Things are good. I think that the trends out of South Africa, out of New South Wales and Australia indicate that the virus there, the new strain, is peaking, and the market's picking up on that. There's some interesting scientific studies that show that it clearly is less virulent. It's going to crowd out the Delta variant. Hospitalizations are not going up the way they were expected to, and now you've got the new Pfizer pill. So I think the market likes that scenario, and now we're back to focusing on what? Inflation, interest rates. The one thing I'll add to the mix is I don't think it's a given that the Fed raises rates in April. We know the tapering is going to end by the end of March, which means sort of zero stimulus, particularly with Build Back Better now on the shelf. So I think the big question the market is going to deal with is, are we really going to have higher rates? And if you look at the 10-year, you don't see it. So if we don't have higher rates, then growth forecasts can accelerate, and particularly in the tech sector. So I like the tech sector here. I'm going to take Dennis's fallen angel and sort of transpose it on the tech sector. Look at what's come down, like Nvidia, and held support. And I think this, from an investment point of view, longer term point of view, that's what you want. You don't want, in the tech sector, the really broken angels, which typically translates to cloud stocks with no earnings or hype stocks. But you want these solid companies that are going to lead growth over the next 3 to 5 years. And I think Nvidia is now universal, and that scares me a little, but it's universally regarded as a growth stock for the next 5 years.
I mean, it's in everything. I mean, in metaverse, it seems like Nvidia, it's just like if you say something that's getting hot, it's like Nvidia's right in the middle of it. I mean, it's hard to bet against this company that has positioned themselves so incredibly well. And I mean, we know this market likes the big names. It likes the winners. The winners seem to just continue to win. It's been that market for a long, long time. And so you get a pullback on Nvidia of like basically, 15% from the highs, 16% from the highs. It's usually a buying opportunity.
I agree. And another stock we've talked about that I'd like to look at is Fortinet. So in a period like this, where we've had a very steep decline, a lot of negative headlines, I look to see which of my favorite stocks get back ahead of the market toward their highs. And look at Fortinet.
Yeah, blast.
Cybersecurity, I think cybersecurity is a 5-year play as well. You just have to find the right names, whether it's Palo Alto Networks. But to me, Fortinet is a stock you want to own long term. You got to buy it on a dip. We had the dip. So we look for a few pullbacks here. But this is what I'm looking at, in addition to some special situations that we've also talked about. So what's your view on a stock like Fortinet, Dennis?
I mean, its relative strength is incredible. Here you had the early sell-off in early December. It took basically no time to get it back. And we look and we're approaching all-time highs. So you're right. This is leading. Here, we've got a market that wants to be led, and this is one of your leaders. And I mean, if you look at the long-term chart on this thing, it's been straight up for a long time. So it's hard to fight momentum. I mean, this stock started its march really back in 2017. It was a $35 stock. So you're talking about a stock that's up 1,000% in the last 4 years. You could say maybe it's gone too far. You could argue that, but I know fighting this tape and fighting that strength has been a losing game for a long time. Those long-term momentum leaders continue to lead, and you're right. When you're looking for who's going to lead us in 2022, well, look who's leading us at the end of 2021. It's not a bad place to start.
I agree. That's always worked for me. One stock that I mentioned, I think last week, a few eyebrows were raised, was Live Nation. So 2 weeks ago. So let's look back at LYV.
This is a reopening stock. This is maybe one of the great reopening plays.
Yeah, and what's interesting to me is what it did on Thursday, Friday, and Monday. It basically stopped going down if you zero in on some near-term price action. The market was spooked by the options expiration and a lot of dealer hedges coming off. And I was watching Live Nation, expecting it to go back down and crack the low, but it didn't. It just stayed flat, and now look what it's done in the rally of the last 2 days. So
the 2 days, incredible move here.
And if you watch the media, you see that there's an amazing capacity for people to somewhat ignore the risks of the Omicron variant. That people have basically said, I'm tired. I want to go to shows. I want to be out with friends. I know I'm going to get it. So I think Live Nation is over that reopening growth tug of war, and I love this stock as a reopening play.
Yeah, I think you want to wait for a pullback now. You had 17% move in 3 days. Maybe you want to wait a little bit, instead of chasing, in my opinion. But again, this is, if you're looking at reopening stocks, this is going to be one of the leaders in that as well. So, but what about the reopening trade? I think, on pullbacks, I think you are buying those stocks, because I think, to your point, it doesn't appear that many people are dying from this, which is a good thing. And I think you're right. People are exhausted of it. I mean, I've changed too. I was, when this first started, I was locking down because we didn't know what we were dealing with. But now I look and I'm like, well, the majority of people, aren't really even getting sick from this thing. Why are we scared of it? That's how I'm looking at it.
I saw an interesting take on Twitter, and it was an interesting way of looking at this. Is, in a way, you could say that the Omicron variant could almost be considered like a best case scenario, where everybody gets sick. Everybody gets it. Very few people get seriously sick, and then we all get immunity, and then we just move on, right? Everyone gets it. We know that very few people actually get sick or die. Isn't that good?
It's what we want.
It's what we want.
It's very good. 2 weeks ago, I quoted Marco Kolanovic from JP Morgan, who's really been on top of COVID for the last 2 years. It's not his day job, but he does a good job of analyzing statistics. And he espoused the theory that you just identified, Spencer, that it would crowd out the other variants, create herd immunity, and maybe it becomes like the seasonal flu, and we get on with our lives.
That would be ideal.
What we want. We want to get back to normal, because I'm sick
People
of this.
do.
I'm sick of this not going out and doing anything too. So
right.
Do you think you come in, you start buying the cruise lines now if we think that's happening? Or is it, obviously they've had a 3-day rally. Maybe I wait for a little pullback, but is it safe to dip your toe in the water in the airlines and the cruise lines and the casinos, which obviously are very much reopening plays?
I'd say in terms of the airlines, no, because they've got the headwind of higher fuel costs. So they're hit with a double whammy here. They're hit with potential COVID issues, and they've got rising costs. So our power gauge rating is bearish on all the airlines. Cruise lines, I don't really have a feel for. We talk to friends who have been on cruises, and nobody's booking right now. People are afraid of cancellations. They're afraid of not being able to get into a foreign country if they test positive 72 hours before.
Yeah.
So it's right now it's the convenience factor or the inconvenience factor that I think is a potential hit on the cruise lines. You can't argue with the way it's trading.
Marc, there are some questions for you in the chat. Somebody asked for your take on Doximity, DOCS.
Yeah, this has been a major disappointment for me. I believe this is the future of telemedicine. They actually make money, whereas the Teladocs does not. There's been a lot of insider selling as the lockup period expired over various tranches, and so management's been selling. I own this personally, and I've added to it, but it's been a big disappointment. Long-term, when you listen to management, these guys know what they're doing. They're getting ad revenues in addition to telehealth subscription revenues. 80% of the doctors in America are on this platform. It's sort of the combination between Facebook and LinkedIn for doctors. And the doctors that I talk to up here in Connecticut think extremely highly of the company. So I'm violating one of my core principles. I'm staying on a long-term basis with a stock that's in a downtrend.
For whatever it's worth, when I had COVID 2 months ago, this is what I used, and I was impressed with the platform. I know that's worth nothing, but my own experience with it was positive.
This stock has the potential for the January effect too, where you start to get that, the relief rally after the tax loss selling is over, and people are like, okay, I'm going to dip my toe back in the water here. This obviously going to have a lot of tax loss selling that's happened probably already in this. So I look at this as potential to get a lift in early January.
Yeah, talking about tax loss selling, 2 weeks ago, as we were speaking, a stock that I had recommended in my small cap newsletter, Technoglass, got hit with a short attack. That has proven to be a complete fraud. The company's not a fraud. The short attack was a fraud. And the company bottomed out. It opened sharply lower on Thursday.
What's the symbol on that one?
TGLS. We talked about this. This is and the SEC is investigating the short people. What's the name of that? Hindenburg.
Yeah, it was Hindenburg.
And the company, in case anybody's followed us on this, the company has hired an outside law firm to parse through all the allegations in the lawsuit. It's a serious law firm. It's not a rinky-dink law firm, and the board authorized that. So if you've got something to hide, and clearly you're doing business in Colombia, based there. It's the only NASDAQ company, I think, that's based in Colombia. There's going to be some drug ex-cartel people around. But this is a premier company providing architectural glass for big office buildings and now getting into the home building market. But it shows you the volatility and the impact of just one firm that shorted it ahead of it. I mean, this is a crime because the public barreled in and shorted it down at 18 and 20.
Yeah, or sold
look where they are now.
Well, and there's a reason that these firms don't pick on Amazon or Citigroup or these.
They want to be able to influence the price.
Right. So Technoglass trades on average 300,000, 400,000 shares a day.
Yeah. So a headline like this, a report like this, is really going to knock it down.
Right.
Yeah,
I mean that's the question, and we've asked this question on this show, since we started the show 7 years ago. I mean, Citron was one of the first to pioneer this. I very much respect Andrew Left, and a lot of the differences with Citron is a lot of his short calls actually ended up really the companies were really struggling. And he actually did point out some stuff. But the question is, should you be allowed to come in when you're that influential to come in and short a whole bunch of stock? And then write a report on it, and then knowing the stock's going to tank, should you be allowed to cover your short into that the very next day? Or should you, if you're issuing, a report that's knocking the stock down 50, 60%, should they be held to say you can't cover for 90 days or something? I wonder if that's what the regulators should look at. It's hard to say that they're not entitled to their opinion. Everybody's entitled to their opinion. But if your opinion is the catalyst for knocking it down and then you're buying it into your bearish opinion, that's where I think the regulators should look.
I agree with you. And what they're also looking at is, did Hindenburg tip off some hedge funds who shorted it as well?
And that's brutal. If you you got a report that with your opinion that is going to move the stock, and you're telling all your buddies before you issue the report, and we don't know if that's going to happen, but they're looking into that. But if that is happening, I mean, they're going to argue that it's not inside information because it's only an opinion piece. But should that influential opinion piece be considered inside information in the future? I mean, there's definitely, if it's going to be moving it that much, it's obviously influential. It's material. It's just a matter of it's, not insider material. So it's tough. It's a tough job for the regulator to figure out how to fix this issue. But I mean, there's definitely some companies getting rich off of issuing these short reports.
Yeah, I agree. And the question is, the big issue is there are some good short researchers. Jim Chanos, Leff and Citron have decided to leave the game because of the Reddit crowd.
Right.
So, short research is very valuable, but it shows how you really have to know your company. If you own a stock like this and the fundamentals are sound, I mean, could there be accounting scandals like there were with Enron? Sure. So you wouldn't poo-poo an Enron, but typically the fundamentals will win out unless there's some serious issue that's been uncovered. And in this case, it looked serious, but it wasn't.
So, Mark, looking ahead to next year here, are there any, like, aside from some of the names we already discussed and Dennis talked about, buying some of the laggards for a potential January effect type rally, are there any industries or sectors that you have your eye on next, call it next couple of weeks or couple of months, or the first quarter or so of 2022?
There are. I think home builders are going to continue strong. The underlying demand is there. So the home build XHB is looking like a buy to me. And then if you drill down, the bullish stocks that are rated bullish in the power gauge rating in the XHB, stocks like DR Horton, some of the suppliers, Whirlpool, the smaller names in that group, I think. And interestingly, Technoglass would be in that group if it were traded there. Another thing I'm looking at is infrastructure stocks that relate to home building as opposed to public works progress. So,
like who?
Wire, Encore Cable. They
tickers on those?
WIRE.
Okay.
They make that is Encore. They make very mundane stuff, but you need it in every house that you build. And also they service the commercial market. So I'm looking at stocks with really good earnings that'll continue to benefit from the trend in home building, which I think is really strong. I don't think that's going away.
Mark, I'd be curious to get your thoughts. A few people, we've been asked like 3 days in a row now just about like Rocket, right? Well, we get asked every day about Rocket. I'd be curious to get your thoughts. And the housing market's on fire. What is, do you have a take on like the UWMCs and the Rockets of the world and why they've underperformed so badly?
I don't quite understand what Rocket's business model is. Dennis, you were pretty close to it when it went public. What's the unique selling proposition that make you want to own Rocket?
Well, I mean, it's the lower interest rates is really a driver here for a long time, and if we're going to a rising interest rate environment, I'm not sure that's as attractive of a stock right now. So the refinancing, right? So I mean, you know about this company too. I mean, obviously, Spencer.
Yeah. I mean, it's the idea is that the idea that they put forth is that they're the most efficient, easiest way to do any sort of home financing via, be it a mortgage,
I mean,
be
the
it
huge
a
boom and the
a
low interest
refi,
rates in the
whatever.
housing, they've benefited from that. You could argue, has the environment been any better for RKT and UWMC, similar company? And, obviously now these stocks are weak because I don't think the environment is nearly as good as it was for these companies, at least the environment that we're anticipating that we're going into. So it's not surprising that both of these stocks really struggled.
Well, when I just took a quick peek at the financials, they are expected to earn $229, and the stock looks too cheap, because smart money is shorting it, so there's a big short position. I guess you've got a short sale, short squeeze potential, and a January effect bounce. But what triggers it, Dennis?
I think you could have that potential for a few days, of rally again on the January effect on all of these stocks, but are these going to be your entire leaders for? And one thing to say even about that January effect, a lot of times that peters out, second week. Like it really is the lift. It seems like in the first week, January, you get a big lift, 4 or 5 days. Yeah, these stocks are all coming back. But then what happens is there's so many bag holders that didn't sell last year and they start to come back on and start selling. Yeah. It's so difficult when stocks are in downtrends to just buck those trends and continue to go higher. So I'm not sure this is where I'm looking long-term on these names. I mean, there's been so many people who've been calling for short squeeze. Let's squeeze Rockets. I mean, this was the whole Reddit, and obviously social media thing for a long time is, high short interest stocks. You got to buy these because they're going to be a squeeze. And what ended up happening in the long run is a lot of these companies that had high short interest for a reason. And that reason was that the stocks were, the companies, weren't as good as maybe a lot of these people who are on social media were saying that they were. And I think Rocket is an excellent company. I think RKT has just struggled because lately because the environment maybe was as good as it gets, and the environment that they're going into isn't going to be probably as good. That's what I worry about with RKT.
Yeah, I mean, I always
run company though.
if I'm going to catch a javelin, I always look for a catalyst. You know, why do I want to put myself in harm's way? Is there a reason? And I'm not seeing it here, other than, you know, maybe it's undervalued.
Some people catch falling knives. Mark prefers to catch javelins.
Yeah.
Marc Chaikin is the founder of Chaikin Analytics. He's the creator of the Chaikin Money Flow, the Chaikin Power Gauge, the Chaikin Oscillator. Mark,
with all that, how come I'm not called the Einstein of Wall Street?
Yeah, it's a great. These are the questions, Mark.
Yeah, you know,
these are the questions.
Woe is me.
Yeah.
Hey guys, a very happy holiday season. Merry Christmas to Dennis.
You too,
Spencer, by the way, you follow someone on Twitter who my son follows. You follow a guy named Parker.
You're talking to me or him?
Yeah, no, you.
Me?
Yeah.
Okay.
It said my son has a site called Beyond Wordplay. He's into words and games, and it said Eric Chaikin, Beyond Wordplay, and Spencer Israel follow this guy named Parker.
Who's Parker?
I don't know.
Well, you follow him, Spencer.
I don't know.
You don't know who you follow?
Do you know how many people I follow? I'll tell you. I follow 1,500 people. That's a lot of people.
You're supposed to know everybody you follow.
Yeah.
I follow. How many do I follow? About 1,000, and I know them all.
I follow 20. So
I follow 1,023, and I know all the people who I follow.
There you go.
All right.
You gotta know who you follow.
Guys, have a very happy new year, and we'll see you
Mark.
on the other side.
Have a good one, Mark. Yes, to answer your question, Red Room, the Chaikin indicator is named as such because Mark made it. Mark, the Chaikin Money
Mark
Flow.
has been around a long time in these markets, and Mark makes good calls. And and even the call in the last stock. What was it? Techno, the one that was beat up by the short seller.
TGLS.
Yeah. So and obviously it's come right back significantly. I know I just got a message from my buddy Mike, and he was saying I bought that on Mark's call on our show. Fantastic job. I mean, I can remember when Mark made this call when the stock was down at $20 on our show, saying he was buying. He thought he should buy this dip, and now it's 27 here 2 weeks later. So. Great pickup, whoever bought that on Mark's call.
Some feedback from Mark from the chat. Mark needs to flare his hair. Mark is my favorite guest.
Oh, to be the Einstein of Wall Street, he's got to flare his hair because we know.
Vintage. We definitely did ask him about Doximity. Rewind the tape like 10 minutes. We asked him about Doximity. All right.
Yeah, and you know what? And I said the same thing. I think there's the potential for DOCS to rally in the first week of January from the January effect. So it's the kind of stock that I would like to own into January. I just don't want to be early. That's all. Yeah. You're still 6 full days today and the next 5 days next week of December. You don't want to be early on this because there could still be a little bit of late and Johnny-come-lately tax loss sellers coming in. But I think once that abates, I think there could be a relief pop in some of these names. Not investing in these long term, just looking for an initial pop in early January in these names. So I'm starting to write a list, like you were Santa Claus, right?
Making a list.
Making a list, checking it twice, gonna find out who's ready to rally on the first week of January. That's the goal here. So we're trying to build a little list of beaten down. This would be added to my list, DOCS, of beaten down growth names that could potentially have a relief pop. Call it dead cat bounce, call it whatever you want in early January. So it's on my list. Now, because of you guys, it's on my list.
All right. Before the end of this show, I'm going to think of a rhyme for that. He's making a list, checking it twice, but I will think of a rhyme as related to stocks.
Gonna find out which stocks are nice.
I would do it in the next 20 minutes, I promise. Okay. Hey, we noticed right before we went on today that the casino stocks randomly were trading higher this morning. I don't know if anyone saw that. I think I saw some positive chatter out of Macau. Nothing too specific, but LVS, if you look at that, is trading higher. Win is trading higher, 2.5%. MGM. Where's my MGM? There's my MGM. Up kind of the same as Win. So this would fit into the reopening trade. The cruise lines are also higher this morning. So it would fit with that theme. But I was surprised, particularly with the LVS, because that's up 4% this morning. On nothing too specific. I think literally it was just some positive, like a positive commentary out of Macau is, I think, all that it was. But if you pull up a daily here, I've lost track of these a little bit. I don't look at them super often.
Reopening stocks, I mean, these are definitions. So the three main plays I think for reopening is casinos. Obviously, there's individual plays like Live Nation as well, but you can just quickly think casinos, airlines, cruise lines. Those are three groups that you think are definitely reopening stocks. I don't know how else you'd classify them. The casinos are beaten down. Valuations are dirt cheap. I mean, if you think you're going to have a reopening rally coming, if you think Omicron, we're going to get past this, we're all going to get it and then get back on with our own normal lives. If you believe that, I think you want to be long the casinos here. So I'm still long Penn Gaming. It's the only one I'm still long. Bag holding this. I'm not taking the tax loss on this one because for the simple reason, I think the company can, potentially still turn around. So I'm not going to take a tax loss on something that I think could potentially still come back. It's showing some life. Would I be a buyer of pullbacks on Penn Gaming? I might buy some. You could look DKNG and say, well, if sports come back strong, DKNG could be a buy down here too. But again, valuations aren't as cheap on these as they are on Wynn, Las Vegas Sands, even MGMs. So maybe a strike there first if you're a value guy.
Okay, yeah, I have no comment on it. I think it's everything you said I agree with, so I have nothing to add there. I wanted to note quickly about Tesla yesterday. We know this whole thing is stupid. I actually regret talking about this weeks ago. But the whole thing, the story about Elon Musk selling shares is notable insofar as it is unusual because he hadn't sold Tesla shares in like a decade or something like that. But like that's basically it. It was interesting. I think I regret
It's not interesting anymore.
But I also regret conflating that with the movements of the stock because like in hindsight it was just another noisy headline. Because like what happens over the weekend, right, is he appears in a video and he says, yeah, I think I'm done selling stock. And then Tesla shares go higher. And then what happens yesterday is, he sells a little bit more. And what happens? Tesla shares go higher. So it doesn't matter. It was interesting because it was rare and unusual, and that makes it news. But
the majority of his selling looks like it's done, though. So
yeah.
I think investors are just saying that again. Like, I think it's the relief, where he basically said the majority of his selling is done. Yes, there were some late reports that he sold a little bit more. But it sounds like the majority of his selling is done. And that's where people are saying, okay, here's the green light to come back in and buy the Musk dip, call it the Musk dip, because we went from 1,200 down to 900. And I think you are buying Tesla on pullbacks. I'm not putting Tesla in my long-term account. Again, people, when I say that, it's for trades only because I've never understood the valuation of this company. So again, in my long-term portfolio, I'm a value guy. But my short-term trading account, I trade anything. And I think on pullbacks, you're probably buying Tesla.
Yeah, over 1,000 now. I mean, I was concerned a couple of days ago, but there's nothing like price to change sentiment. And, we had that bounce. And there's probably no reason to be bearish the stock above 1,000, right? I would think. There's
the only thing is if you're coming in and buying it now, just rallied 120 points in 2 days. So you just rallied 10, 12, 13% in 2 days. So that's chasing. So now I want to pull back to get into it. So again, I'm not buying reps, I'm buying dips. This is a rep. You have a 2-day ripper on this. So it's not a candidate for me to even be looking at it from the long side here. Does it continue? It very well might. But I buy dips after the strong move. So if we were to pull back to, let's say, the 957 low from yesterday, well, then it gets interesting because then I got a level to lean on. But right now, if I come in as a swing trade and I buy it at $1,008, we got to lean on the low at 886. That's too far for me to lean. So again, you can see how I consistently look at trades in the same way. First analyzing where am I getting out and then adding a target maybe from that. But this is the way I approach my swing trading. So, when it's that far off the low from just 2 days ago, I've missed that trade now. So, I'll look elsewhere.
All right. We will do some ticker time. We've got a few minutes. Peter Tuchman will join us at 9, so we've got a few minutes until that's going to happen.
People are always asking me what I hold in my long-term account, and obviously I give you tidbits. Let me just bring up one of them. I can't show it. I'll list you off the stocks.
Do you even know is the question? I don't even think
half the time I don't know. These are stocks I've had some of these for decades in there. Yeah. I mean, on long-term, I try to do the Warren Buffett approach. Again, the trader in me causes me to trade my long-term portfolio sometimes, but there are literally, sometimes a week or two that I don't even log into my long-term account because if I do log into my long-term account, then I'm like, oh, I didn't know I was up this much in that. Like I remember the stock, I had a stock taken over, it was a smaller one. I didn't even know it till 2 weeks later because it was a smaller company, didn't hit headlines. I was like, why is that stock up that much? And I was like, oh my gosh, it was taken over with some small cap value play that I had picked up somewhere. So that's how often I log in. But if I'm looking, at my top holding right now, my long-term portfolio, it is QQQ. That is my very top holding. It is 16% of my long-term account. The QQQ itself is now 16% of my long-term account. So, and then I look at my second top holding, and it is Apple, and it is 9.7% of my long-term account. So you can see I'm clearly heavily megatech. Even though I was trying to lighten up some of the megatech, I'm still so heavily megatech because that stuff has just continued to take over my portfolio as it's gone higher. My third highest holding is still MasterCard, and I've had that for like 13 years, and it's just grown and grown. We know at this point in time, I've locked in my price for January. I do intend to sell some of my MasterCard shares. So, and I did that by doing a synthetic, I created a synthetic stock short position to offset my long position to lock in my price for January because I didn't want to pay the tax in 2021. That's my third largest holding. My fourth largest holding, I'm just going through these numbers again, smaller now, at 4.63% is Microsoft. Nucor, actually, no, Nucor is ahead of it because Nucor has grown, and it's now 4.74% of my long-term portfolio. So,
Wow.
Yeah, so you can see I've got Nucor and I've got a bunch of tech stocks.
You got a lot of tech. Yeah.
Merck is in there. It's still a big chunk at 3.17%. AbbVie is in there. I've had AbbVie since birth, and how I joke with that is because I owned Abbott Labs. I got AbbVie from the spinoff some 7 or 8 years ago, and I've held it the whole time. So it's 3.67% of my long-term portfolio. And then you start getting lots of ones and twos, and these are smaller ones. I got Take-Two. I've got Pfizer. I've got Marvel Technology, MRVL, which is a good one. It's been really good for me. I have L3 Harris Technologies, LHX. I bought that a long time ago. My average cost basis on LHX is $28. The stock is $206, so I'm not intending to sell that anytime soon. I've got some BMO shares because my wife worked there for a long time. That's back in Montreal in Canada. And I got some Biogen. So that's pretty much and there's still, and I have another long-term account too, so I'd have to go to a second account just to and I can do that as well. You guys are just curious what's in my long-term portfolio. So that was one account. Another long-term account, I've got Enbridge, which is a big Canadian utility company, and a lot of these aren't trades. A lot of these companies had for years in here. So I've got, I added Ballard Power, and I shouldn't have. I wanted a little bit of growthy, and I'm down in that one. It hasn't been a good one. Bluebird Bio, I have in a long-term account. It's been a terrible. It's been my worst stock.
You get some randoms in here.
Oh, you do. I've got, just going through CIBC, which is a big Canadian bank. Again, I'm Canadian. I added Deutsche Bank to my long-term portfolio very recently, like within the last month and a half. I've added DB just to get some exposure over, obviously, Europe. I've got Hive Blockchain in there, which obviously we know why I have Hive because we've had Frank Holmes on there. I'm a big believer in Frank. I did sell half of it when it got up and just got silly town. I sold half of it around, I think, the $5 US equivalent. Wish it was sold all because I could rebuy it all right now. It's basically back to where I bought it, but I sold half. I have Qualcomm. I've had that. I bought that right in March of 2020. It was one of the few stocks that I bought. It's been really good. I've got Zynga. We know that I've got Zynga. I'm down in the Zynga. So there's a few stocks that I'm down in the long-term account. So yeah. So I'm kind of giving you a glimpse, of what I've got. And you can see it's fairly tech heavy.
Yeah.
It's fairly tech heavy with a little bit. I added Coinbase recently, just a small half-size position in Coinbase. Which isn't really my style, but it's not an expensive stock. It's just a question of, is it as good as it gets? So I did add some Coinbase recently, like I'm talking in the last couple of weeks. I can tell you where I bought it. I bought it at 256. So I bought it right in here. So, and I'm probably just looking at, the support, and I'm looking at, okay, well, crypto's for real. This is positioned well for that. So I did add some Coinbase, although I'm only at a half-size position on that one because I'm not as convicted. And I got a bunch of ETFs. I got SPY, I got Google, I got, Amazon. So there you go. That's pretty much the bulk of my long-term tech heavy.
Last week, I walked through my entire portfolio on Benzinga Live. If you're interested, I will put the link to that in the chat if you want to watch that. But
and this is stuff that I don't trade. This is stuff that I will do a little bit of like I probably, on these long-term accounts, you make, a dozen trades a year. Maybe you do some different stuff, but not active at all. My main accounts, I make hundreds of trades a day, scalping, doing different arbitrage, relationship-based trades, which we've talked about on our educational webinars. Completely different animal. I see my trading as my income, which is basically my only source of income, the majority of my income. And I see, that as my long-term investing, which is trying to build my wealth. So I'm trying to buy good companies at reasonable prices, following the GARP approach, really. And Google, one of my biggest ones as well.
Obviously, we'd be here for a week if Dennis were to list off every single stock he owns. So
there's 1, 2, 3.
We're not going to do
I've got
that.
about 5 different accounts, like longer term.
Yeah, we're not.
So there's a bunch of them. People say, why do you do that? One is it's a little bit to do with there's the insurance, right? You only insure so much in a specific brokerage account. So I'm even in case the world ended.
Really?
Yeah, you're only insured.
No. I know that. I didn't think that was a reason to.
It is. That's why if you've got a significant amount of money, which I've built some wealth over my life, then you want to not have it all in one brokerage, just in case that brokerage goes down. You're only insured up to a certain point.
Fair enough.
So I have a little bit of that reasoning behind it. But also, I always say you want 2 accounts if you only have one, because what if one goes down? Especially your trading. You should always have 2 trading accounts, because what if one platform goes down? You say, Robinhood's down, I can't get out of my stocks. Well, okay, I got another account. Yeah. So, with a different brokerage. So you've got a backup plan for technical, technical difficulties.
Yeah. All right. If you have any tickers for us, drop them in the chat. We'll take a look for the next few minutes here. Who just tapped me on the shoulder? Whoa, Luke has a Benzinga Christmas sweater. You guys check out Luke's Benzinga Christmas sweater.
Get Luke over here.
Luke, do you want to hop on the show for a couple? Or just say hi.
Yeah, come on.
Just say hi. Just say hi.
Hot Stocks, Luke, get over here. I haven't talked to Luke in a long time.
Luke, what's up, man?
I only want to hop on if Dennis Dick is here.
He's here.
What's up, Dennis?
What's going on, Luke? How are you, buddy? It's been a while.
I like the hat.
Yeah, we're trying to be festive here. I even put on a Snoop. I got a Snoop Christmas. I haven't even showed it yet. My wife made me that shirt, actually.
Okay, that's amazing.
Yeah. I'm a huge Snoop fan. I've always loved Snoop. So my wife, we don't do Christmas gifts for each other, but she's like, "Oh, I made you that shirt." I was like, that's pretty good.
That's pretty cool.
All right, well, Dennis, guess who's doing Super Bowl this year? Super Bowl halftime.
Is he?
He is.
No, really?
Yes.
Holy mackerel! That just made my whole day.
Well,
awesome.
Is it really?
Yeah.
I didn't know this.
I listened to an interview on the radio this morning with him talking about it. So
fantastic! Oh, that's a reason to watch the Super Bowl right there. Huge. That's huge. That'll be the highlight of the Super Bowl for me, because I know the Lions ain't going to be there.
No, not looking good.
No, not
looking good. Not looking good for the Lions this year. Oh, we win a couple games.
Between Dennis and Luke, we got like 2/3 of the Lions fan base on the show right now.
Let's go.
This is exciting. Anyway, all right, Luke, thanks for stopping by.
Thanks for having me, Spence.
Yeah.
Merry
Christmas. We got to get Luke on here more often. It's great to see you, buddy.
All right, good to see you too, Dennis.
All right.
Take care.
All right, let's do some ticker time. Drop your tickers in the chat. We'll take a look. Let's start with, okay, fine. Do you want to look at Boeing? We'll look at Boeing, ambient and stuff. I'll do it for you. How is Boeing doing today? It's up 1.6%. Is that right? Yes, it is. Popa Daily. Dennis, thoughts on Boeing here?
Reopening stock.
Yeah.
Is it one of the name? Maybe on a pullback. We just had a big run, so you're looking at it from 185 up to 202. Doing that, I'd have to give myself to 185. I don't want to give myself that much. Yeah. Get down the mid 190s on a pullback. Maybe we'll get another spooky scare or something. Omicron brings the reopening plays down. I would be buying that dip on any reopening stock at this point in time, because I'm of the belief that we're going to get past this virus, and I think a lot of people are going to get it. We're going to probably get to herd immunity. And then we're going to be at a point where a lot of people, I believe, are not dying from this. And I think, the reopening trade could actually go really well in 2022. So I do want to position myself in some reopening stocks, but they've had a 3-day run. I'm going to wait for a little pullback. I think you'll get it. It seems like the market that always gives you a pullback. If they don't pull back, well, you missed it. You move on to another trade. You don't have to, and people dwell on that. They're like, I can't believe I didn't. And this is what just to go on a side note for just a minute. It's a mistake that newer traders make, that they can't get past the fact that they missed this trade. And what I'm going to tell you today is there's always another trade. I miss trades every single day. You will always. And if you're doing this for a career, even if you're doing this on the side, You will always miss trades. You're not going to get them all. It's okay. If you missed it, you move on to the next trade because there's always another train at the station getting ready to move. But don't jump on the moving train because you think you missed it, because just when you think you can get on that moving train, then it's and then turns around and then it tanks on you and you're on the wrong side of the trade.
I
so
remember,
don't chase.
I remember years ago, someone at Benzinga was lamenting that she had sold her Bitcoin in order to buy a house. She had sold her Bitcoin at like, and this is when Bitcoin was at like 50. It was at like 15,000, and she sold it at like 5,000, and she was like so like despondent. And I was like, you'll never make it. That's no way to live. That's no way to live.
Can't continue to worry about your bad decisions. I've made so many bad decisions. I owned a Quiznos sub shop, like I made some bad decisions in my life.
Yeah.
So, I mean, you're always, if you're taking on risks, you're going to make mistakes. And, and I think the majority of some of your most successful entrepreneurs have made a hell of a lot of bad mistakes through their careers, whatever they were investing in. So you're never going to be 100% right. You don't even have to be right half the time if your winners are bigger than your losers. You just got to find, eventually, you're where, you've got some opportunities. But I mean, you're sitting there, you're dwelling on your mistakes. You're trying to be perfect all the time. There's absolutely no way. You've got to move on. You got to get past those bad trades. You got to get past the trades. And people struggle more, not so much even with their bad trades where they're losing money. They struggle with the fact that they missed out on that huge opportunity that the next guy made. And Twitter's the worst for this because they'll rub it in your face. You look in your you go on your stock and everybody's making money on your stock that you had, and you sold it, for a 10% gain, and it's up 100% a month later, and you're like, whoa, I really screwed that up. You got to move on. You're never going to get the entire gain. You're never going to get it 100% right.
All right, let's do a couple more real fast because we can talk about this all day, but we got a few minutes left. We can look at Fastly. Dennis, does Fastly fit into your criteria of beaten down growth name that you can maybe take a flyer on for January?
Yeah, and rounding and looking nice technically too. 37.47 would be my stop out point here. Again, I'm a little bit spooked. That's why I haven't really put a lot of these positions on yet for January, because I don't want to be early. I don't want to be another wave. Maybe we get a bad weekend with some news or something happens, with Omicron or whatever. I don't want to be too early. So it's tricky. Could you start nibbling at these prices? Maybe that's the way to play it. Maybe nibble a little bit on some of these names that we've been talking about that could potentially have the January effect. And remember, you could position yourself awesomely, and then the January effect maybe doesn't happen. Maybe there's another headline that makes that not happen. So nothing's 100% guaranteed. But, from, other things being equal, its seasonality effects should help to lift these stocks in early January more often than not. And all we are is playing the percentages. So yes, this would be, I'll write it down right now on my shopping list for a potential January relief pop. Fastly, DOCS were the two stocks I added to that list today.
What else do you have on that list? Do you have it written down anywhere, or is it all in your head? I feel
some of it, but I mean, you could just go all of those names, like the Kathy names, to a certain extent. I mean, you could pay ARKK right at the top of it, but it's kind of rally. Do you want to the casinos? I would put in there. Some of the retailers, and here's an interesting one for you too. What about like a Macy's here? Because typically next week is often, a retail stronger week as well for retailers, because people are anticipating that, Christmas went really well for these companies. So, Macy's sets up not bad too. And I would add that to the list as well. Not that there's a lot of tax loss selling. It maybe doesn't fit in that category because Macy's had a pretty good year, but I just think it fits into the reopening theme. So I wouldn't necessarily put that in the tax loss selling category where it's, there's been tax loss selling, harvesting, holding this down. It's more a fact that Omicron brought this down. It hasn't rallied with some of the other ones. So I think the retailers are the forgotten reopening play here. And I wouldn't be surprised if you see like a Macy's. Full disclosure, I have a small position just of overnight Macy's, which isn't even, it's small. I didn't even realize I had it in there still. But anyways, so I think a stock like this, though, setting up, like I don't have a swing trade on it. I just had an overnight trade on it. So anyways, I don't like talking that stuff, but it's so small. It's Mickey Mouse. I didn't even realize I had it, but I have to disclose that I had it now. I think a stock like this sets up well for maybe a reopening run if we're going to get a reopening. So I think you got to look at the retailers too.
Are you ready for my song?
Yeah, you going to sing to me?
Yeah, sure, I'll sing. It's very short, but I thought of it while Marc was on or while you were on. I don't remember anymore. But he's making a list. He's gonna buy stocks. He's looking at Robinhood, Macy's, and Crocs. Dennis Dick is coming to buy. I don't know if he's looking at. I don't know if he's looking at Crocs, but it was a nice rhyme.
I have Hood on that list too. So Hood is on that list.
All right.
I have not bought Hood yet. It is on that list for Relief Pop. And holy cow, Alan just dropped us
Alan
$100.
Moore.
Thank you, Alan Moore.
Dude.
Thank you very much. He's given us $100 for all the gold we've dropped this year. So I've dropped some gold. I've also dropped some lead to you guys too. So we can't be right 100% of the time, but hopefully, you win more than you lose, and hopefully the show helps. Thank you very much for the $100. Thank you very much to our listeners who are excellent. The chat room, I learned so much from you guys. We get great trading ideas from you guys. Again, Merry Christmas, Happy Holidays, Happy Hanukkah, Happy everything.
Well, Hanukkah's over, but
is Hanukkah, when does that end?
It's been over, man.
Oh, it's over.
It's
Sorry.
been over for like 2 weeks. I
didn't
know.
know that. Okay, well, anyway, so Happy Hanukkah as well.
It's all right. All right. So Peter Tuchman is supposed to be joining us now, and it'll be the last time. Well, no, actually, it may not be the last time because we are doing shows next week. I will be out next week, though. So today is my last day on here for the year. I'll be doing live trading after this. I'll be doing Benzinga live, but this will be my last pre-market prep for the year. So Dennis, if I don't see you, Merry Christmas, Happy New Year, and next time we talk on the stream, it'll be 2022. Crazy.
Well, who's doing the show with me next week?
Well, Mitch and Joel will be here.
And you're gone. Where are you going?
I'm going on a staycation.
Oh, well, that's fun.
Yeah, I'm going
just staying at home and just vacationing.
I'm staying at home, and I had some PTO, and I said, all right, wait till the last minute. Got to use it. So
that sounds like a lot of fun. I like the staycation idea.
Staycation.
Maybe I should have a staycation one day.
Yeah, I have never done one before. So I'll let you know how it goes.
I've never done one either. Let me know how it goes.
I'll let you know how it goes. But Dennis, catch you later. Have a good one. I'm gonna hang out for a few more minutes and say if Peter does not join by like 9:05, then I'm just gonna hop off and we'll go to live trading with Ryan, Junaid, and myself, and maybe if we're nice, a surprise appearance from Mitch, but can't promise that. I know there's a lot of stickers we didn't get to in the chat. For whoever was asking about KTTA, that news was out yesterday. I'm sorry, no, it wasn't. That was a different one. That news was out this morning, and I apologize. What was the news on KTTA? It was no, I'm right. No, I'm not right. That was last week. What the heck, Spencer? Now, the news was out on Tuesday, so why is the stock up? What the heck? I don't know what's going on here this morning, KTTA. I know there's something, but I don't know what, so I apologize. Okay, I do see Peter Tuchman here, the Einstein of Wall Street. Let's bring him on right now. Peter, good morning.
Good morning, Spencer. How are you, buddy?
Doing fantastic. How's your week going?
So far, so good. You know what? It's an okay week. I think we've got so many weird moving parts. I mean, it's a little bit disconcerting that it feels like our lives really being sort of tossed upside down by, I think we're lucky that the variant is not as deadly as the last one, but I still think that we're being tossed around, and that's a little bit disappointing. Everything's been canceled.
Yeah.
Right? But
yeah, I definitely, especially where you are, I've been hearing a lot about cancellations in the New York area and Chicago too. So
New York is in deep trouble relative to the spread transmissibility of this thing. But let's talk about markets. That's what we care about. That's what's important. And I've sort of been doing a little research on the old Santa Claus rally.
Yeah, what do you got for us?
Of it. And the definition, I always thought it was like, after like December 5th, coming into the end of the year, that sort of lift of the boat with the tides come up and stuff like that. And that's actually not what it is. It's literally defined by the last 5 trading days of the year, the market sort of rallying into it. So we've yet to see whether Santa Claus is coming to down. We have seen, I often discuss this on this show too, that the market can basically deal with one bit of news at a time, right? Over the last 2 years, even though I know stimulus has been the biggest catalyst in the market going higher, it's rare that even with sort of aggressive news and headlines about the virus and what it's gone, how it's dealt with our lives over the last year and a half, it's never really put a major cap in the market or a follow through on the sell side. And it seems after the last 2 days of trading, when the market was able to assimilate one thing at a time. Look, we saw what happened on Thursday after Thanksgiving. That was kind of a major knee-jerk reaction to the first influx of this new virus. But since then, the down days have been sort of a mixture of the virus plus the taper plus the interest rates.
Yep.
A lot of other, plus just tech getting hurt, plus the high flyers being sold and whatnot. Now, the last 2 days, we've seen a little bit of a lift, right? And, this morning, it seems like we have a little bit of a green day. Market feels fragile, but, my gut is that we'll get through this. And look, the time will tell whether Santa Claus is coming to town or not.
What is the feel? I know you're not you're obviously not on the floor right now, but
I have been and I will be, but for this moment, I didn't want to miss the show, so I'm still at home.
Right. So what is the sentiment like down there? Not so much for right now, but going into January here. What are the expectations, but just what are the feelings? We've been talking throughout the last couple of days about maybe looking to buy some beaten down stocks that have had terrible years, maybe buying those for kind of January effect. But what is the general feeling about the overall market for January, being that we are 1% off all-time highs in the SPY?
Look, it's a fascinating market. I don't think, we often talk about I've seen this movie before, and I don't think I've ever seen this movie before, at least in my memory, where you really see markets trading right off record highs, yet and there's an explanation for it, but I don't remember, some of these look, we're seeing some of the great favorites of the last 18 months have gotten battered pretty heavily, whether it's the meme stocks, whether it's the high flyers, the techs, the stocks that were pandemic friendly,
Yep.
Been ruthlessly taken apart, and a number of other stocks, right? And so why is that? Let's kind of analyze what's going on here. We saw, we talked about it last week, you weren't on, but with your partner, and that was sort of a fun conversation just about the fact that the high flyers, there was so much profit in a lot of these high flyers that basically a lot of these funds that were just trying to get out of them, getting into cash, liquidating positions and whatnot, were kind of ruthless in their approach to just getting out of them, or whether it was the momentum of everyone getting out of them once they sort of tipped the bucket, I mean, to see the way the Pelotons have traded, the Babas have traded, when they don't look, let's be clear. If we analyze this last year, when they love a stock, whether it's because of hype, FOMO, headlines, or reality, they take them up with abandon, man, right? We've saw it with the market. We've saw it with individual names. There's no rationale. It is irrational exuberance when a stock goes from 147 to 547 or from 2 to 483 or like DWAC or CAR or any of these crazy names. When they're buying them, whether it's a short squeeze, whether it's the meme boys, whether it's hype, FOMO or whatnot, there's no end to the absolute breadth of these things on the way down. And so what we're seeing now is the breadth on the way down. On the way up, that now we're just seeing the breadth on the way down. When they want out, whether it's the everybody jumping on that board or guys getting out of big positions, trying to preserve any kind of a profit they've seen in these names, they just get out. I remember back in the old days when, you had taken a big position in the stock and it was time to get out, you kind of worked the order. You didn't want to affect the market too much. You take it down a quarter or a half, and you were good with that, trying to unload some stock.
Now you want people to know I'm selling.
Exactly. It's like, I'm here, I'm getting out, and I don't care about any of you. And I'm not going to let you know I'm doing it. You're going to know because the stock is down 40%. It's the same thing we're seeing with earnings too.
Yeah.
That's why I talk about having an opinion in this market. The last 10 days, Spencer, have been some of the most volatile. Look, I've seen bigger highs, bigger lows, but the volatility, the kangaroo-ness of the last 10 days has been exorbitant, right? From going down the dime, down 900, up 300, reversal of 1,000, up 1,500, This story unfolds, and looking at individual stocks, right? Like the DocuSigns, the Pelotons, the Babas, the Affirms, the UPSTs, whatever it is, having an opinion, and even into the earnings season that we just saw last year. We saw stocks that blew out earnings that posted and went down, $50. That kind of reaction is unheard of historically. So and I always say this with sheer and utter love for my fellow traders, is that having an opinion in this market about the market or an individual stock, if you're a long-term investor, I would just like let your cards fly and roll out and go on vacation. But if you're trading this market, which is an extraordinary opportunity and a gift, right? You cannot have an opinion about this market because the last 10 days will have surely shaken out the most stalwart trader.
That's a fantastic point. Peter Tuchman is the Einstein of Wall Street. I would recommend everyone check out his course, the link to which is in the description, Wall Street Global Trading Academy.com. Peter, any just final thoughts for us? I'm off next week, so this will be the last time you and I speak for the year. Any final thoughts for us as we head into a long weekend, which can always be interesting? Of course, we're in a period which is typically the quietest period of the year in terms of volume, but that can have outsized effects on volatility. We know that. But any just final thoughts for us for like the rest of the year?
Sure. Look, it's curious because for us, it's the most busiest time.
Okay.
If it wasn't, I would almost try and take a day off. But you've got a lot of mutual funds and whatnot closing out positions. You've got a lot of hedge funds closing out positions. You've got a lot of fear of redemption, so a lot of people going into cash. You've got so many moving parts coming into this. There is still the headwind that we're looking at, which we've sort of digested a little bit about the aggressive taper and the interest rate raise. We're going to look at what inflation is going to look like coming into next year. So there are those forward-looking people who are obviously positioning themselves. This is going to be a choppy week. We talked about it a month ago when I said smart people who have percentage gains in the year would be happily closing their positions out at the end of November, as many do, and not even risk turning a winning year into a losing year. The last week should be interesting because there are moving parts. A 3-day, 4-day weekend here. We are I don't think this has happened in a while where we actually are closed on that Christmas. We usually work half a day. So today is the last trading day before the Christmas holiday. So obviously you're going to see a weekend and a holiday of media pumping us, how the sales went for Christmas, how the retailers did, how Omicron's affecting the reopen, the close down story. That's going to affect us coming into Monday. Then you have the end of the year trade for the last week. Is Santa Claus coming to town? That will be something we'll find out Monday, Tuesday, Wednesday, Thursday, Friday, because we're going to trade through next week, I guess, all the way till Thursday night. So today and the next week of trading are the days where either Santa's coming or Santa's not. He knows if you've been naughty or nice, it's all good. But it's going to be a fascinating end to the year, as every single day has been over the last 10 days. The volatility has been wild. And I know there are guys out there trading this market. Investors are sort of wondering really what's going on, sort of a consolidation or reposturing of you know what? The best thing I can tell you, Spencer, I don't know. That is a reasonable answer to the last 5 days of trading. Good. In 2021. I don't know. We could be up 1,000, down 1,000. Santa Claus could show up. The Grinch could show up. I have no friggin' idea.
Good. I dig it. Peter Tuchman, a pleasure as always. Merry Christmas. Happy New Year. I'll talk to you again next year.
Good luck, kid.
All right. We gotta go to live trading here. I will implore you all, if you can please take 2 seconds out of your time, out of your day, and take the Benzinga YouTube 2022 improvement survey, the link to which is in the chat and in the description. We take your feedback seriously. What do you want to see from us for next year? Tell us. We'll do our best to make it happen. Thanks to our guests today, Peter and Marc. As always, the show is available as a podcast. Like us on all the social media, Facebook, Twitter, MySpace, GeoCities, etc., TikTok. Please remember, all the information from our show meant to be used as informational purposes and not for investing or trading advice. I'm going to hop on over to live trading with Benzinga. Ryan, Junaid, and myself. Catch you guys over there. Let's go make some money.